just worked a short off this. That's nonsense to think that you should have got that. You shouldn't have. Because it came up here. It's not really expanded away, and then it just dropped like a stone on virtually no business. So who cares? It doesn't matter. Obviously, we've got a big area of a transition. Looking for this market to try and push down further. This is the hypothesis I mentioned before. Not a great spot to be entering. I'll have a go, but need to temper the sizing given the scenario. Looking to get in with the selling here, which then can move on side. Doesn't have to move far against me for me to go, yeah, this was a bad trade. So part of my rationale is this perhaps has actually acted as the catalyst, and this is still pretty early in the move. And we are in a situation where the market has seen sellers offering the market lower and lower. And, we know about this, don't we? There's no problem working off that edge. Just know that it's obviously not the greatest spot and you want to be adjusting size accordingly. And in this sort of situation, you can be pretty nimble because obviously it's moved a little bit in our favor. So you should be able to be nimble enough not to get bent out of shape here. And as you experience screen time, execution, all of that stuff, as you get reps and reps and reps, you soon find yourself being able to navigate these little situations without too much trouble. Even when they don't go your way, you don't get spanked. But it takes practice because you have to see things sort of start to go pear-shaped against you before the price actually moves up. And that's just experience in reading the tape. But the further this gets away from that edge, so think of this as a concept, the further it gets away from that edge, this is why I always talk about getting in at the edge, the more it will invite others to take the short trade. So the more who get in it, the greater the chance that it can push up to hurt people. So as long as you're in early, if it does try and hurt these sellers, so these are the ones here I'm talking about, so as it pushes up now, and it's like it's not hurting us because we were in early. Acting early gives you that little bit of cushion against watching, okay, well, the sellers, I mentioned the sellers being on side, so they're on side. So that's what you're leaning on. Now the market will try and push up with the new sellers. And so you can now watch to see if the existing hold and the thing rolls over and the new sellers are okay, or do we have anyone who's going to get walloped? But at the moment, you can see that the spread, isn't starting to put any pressure on shorts or anything like that. But it's still early days, isn't it? So it's about thinking about sellers who are late. So there's three groups. The bottom picker longs, that's who we're looking to take this lower. You can see those for about 56. And then the sellers who got in after those guys. And then, of course, the existing inventory at 65, 55. 54.5, all of those sellers there. If that all starts to move offside, then that puts us at risk. But when I talk about being aware of like multiple points of evidence, so see how now I'm talking about the DOM, how that's behaving, where the bid and the ask. So now I've got to get my mouse near the DOM to exit because I can see that potentially these sellers, the older ones, are going to go offside. So then I'm also thinking about the late sellers who are just about offside and the bottom picking longs. So that's no different to thinking about multiple points of evidence. This is actually monitoring four things: the DOM, the spread, and those three groups that I just highlighted. The whole trying to join all the dots together, as taxing as it is mentally to begin with till you've done it enough times that it's no longer the case, it's actually helpful for keeping an eye on several different things simultaneously. I just drew in an area of more failures there, which are lower, so sellers offering the market lower. With a relief there just where the bid is, a bit lower. There we go. There we go. Starting to get a little bit of breathing room now. See how the bid dropped down even further? Then it got hit. So once you're done doing your head in with this stuff, because it's challenging to begin with, eventually you actually start to see the fun, like the enjoyment in doing it. Obviously, trading is a very serious business, but there is absolutely no problem with enjoying the process, and all of those things I was just talking about and seeing them sort of play out rather than it being a case of you just got no idea what's going to happen. It's that continual joining of the dots and seeing things evolve. And what I'll add, do you think that most people that we're competing with. I'm not talking about the algos. I'm talking about your average run-of-the-mill speculator. They don't have this depth of skill. Yeah, and it's naive to think that there's just this easy money around picking off traders, because it's not. It's a difficult game. Now, the bid's there. Let's see if someone hits it. Still want them to hit that 52.5. Another concept, a lot of selling has occurred at these lows where the failures are. Also, look where the failures are occurring, right at a damn deviation. That's your typical, the algos hang out there, don't they, at the deviations, and you've got a heap of selling come in that hasn't moved the market lower at this point, and it's using up fuel. So that doesn't bode well for us. See, we're going to push up here, aren't we? Didn't break the multiple failures, still hanging around. That's okay, because you have to think about, well, there's buying, there's new buying, here's buying. None of that's been washed out yet. There you go. We got there. Now, always take money when you see a massive liquidation like that hit the tape. Look at all the slippage. There it is. It's fun, isn't it? So down to the transition, you should be basically out now other than the runner. So the next thing to look for is expansion. So expansion, so we're up to our runner now. So this is where we want to really get defensively minded. Now we've got high impact data on the way and people needing to get out. So I reckon this is basically getting flat into that data. If you worked off the edge where I was talking about, you never went offside. That's it for me. I'm flat now because the clock's running down and all that aggressive selling is not actually pushing the market down. But still got out at I didn't get out at the bottom, but got out at a better price than if I'd had taken the lot off here. But you can see the logic for exiting when you see liquidation, because it just uses up fuel and you'll often get a reversion type move. So we're back at expansion, which is no longer wanting to be short. Hung around for maybe something more, didn't really get it. Good fun though. You have to see the fun in it.